Tanjung Offshore suspension of trading in its shares for up to 3 market days could be due to the potential reverse takeover, RTO, by Singapore-based Bourbon Offshore Asia Private Limited. An oil and gas analyst told the Edge Financial Daily that he was upbeat on the potential RTO, adding that the current charter rates for the Offshore Support Vessels, OSV, seem sustainable with the industry climate being conducive currently.
In an announcement to Bursa Malaysia, the oil and gas support services provider said that the suspension of its shares since market open yesterday is in conjunction with a material announcement. The Edge Weekly had reported that the value of the OSVS to be injected by Bourbon Asia into Tanjung Offshore could be 500 million ringgit. Meanwhile, Icon Offshore, which is majority controlled by Equity National Berhad Equinas, fleet of OSVS includes those previously acquired from Tanjung Offshore some 2 years ago. The Edge reported that Tanjung Offshore would need to get a waiver from Equinas for the deal with Bourbon Asia, as there is a non-compete clause following the sale of its OSVS to Equinas for 220 million ringgit in mid-2012. Tanjung Offshore reported a drop in net profit by 20.46% to 2.1 million ringgit for the first quarter of this year. Revenue fell 61.95% to 34.26 million ringgit due to completion of various engineering equipment packages during the quarter.